Retailer Target just out with its earnings, and the numbers are better than expected. Pretty strong on just about every metric that you're going to be seeing on this. Adjusted earnings per share of $1.53. That's compared to the $1.43 that the street was expecting, so a beat of 10 cents there. Also says that the comp store sales were up by 4.8%. That's pretty significant. Traffic also up by 4.3%. And if you look at digital, they are up 42% versus up 28% last year. That's huge. The company has been doing a lot of investing to try and make sure that they can use their stores as fulfillment sales. You get same-day fulfillment through different things like Shipt, pull up to store and order pickup. So this seems to indicate that that is really starting to pay off and helping with traffic in the stores, too. They say that they see low to mid-single-digit growth in the second quarter for comps. Also say that they're looking for second quarter adjusted earnings of somewhere between $1.52 and $1.72. The street's at $1.59 right now. For the full year, the company says that they see adjusted earnings per share of $5.75 to $6.05. Street is at $5.84 right now. But again, I think if you look at those comps, up 4.8%, incredibly strong. That's the 8th straight quarter of comp store sales growth that they've seen at the company. And these are some of the investments that Brian Cornell's been making to really try and make sure that they can use their stores as fulfillment centers.
Interesting, because we kind of thought, I mean, I don't know, that's what we were sort of alluding to, that it could be different than Nordstrom, it could be different than Kohl's, it would be more like Walmart.
Right.
You remember when I was talking about Lowe's, I'm like, this thing is not trading. This thing is not trading, and this looks crappy. And, you know, we had Mr. Whistling past the graveyard over there, Brian Nagel. Everything's fine. I like it. I'm still got a big buy. There's one of those all.
You can get a cheaper buy today.
No, I love Brian, but you know, he's long and he's got to buy, got to defend the stuff. But I don't think people are saying, yeah, okay, we like the investments they're making, and there's nothing wrong with the results.
No question, you're going to have to be very patient with this. But if you know Lowe's and if you followed it for a long time, they have not made the investments they need in the back of the office.
So you're a retail broker and you tell your friend, hey, I know we bought it at 111, but you know
you're liking even more.
No, their comp store sales were up 4.2, and Home Depot is only up 2.5.
I know what Brian's saying, though. I understand his point, but you'd have to be a very patient investor to do it. Remember, this is the same thing that we saw with Target and with Walmart when they made their investments. Initially, the stock market sold off on both of those.
I told you the bid and the ask was not matching up. I was like, what's happening?
You're right, but check out Target shares. They're up by over $5.
That's amazing.
Now. That's a gain of 7%.
That's like Dickensia. That's the best of times, the worst of times.
Brian Cornell actually made those investments that other companies. Same thing with Walmart. Remember when they made the investments? The street didn't like it.
The street hated it.
It takes some time. You've got to be a patient investor if you're going to see
it's digital type stuff, right?
It is. I mean, for Target, that's a big deal. I think they have something like same-day fulfillment. They say they're seeing really strong demand on this. And they have 3 ways to do it. Shipt is that service that if you want somebody to deliver to your door, they can. You can pull up to the store or you can go into the store for the order pickup. I think that's probably helping their traffic in the stores, which is up by 4.3%. They say 25% of total comps growth for the first quarter came from that same-day fulfillment packaging, all of those options that they got in with it. They also are going to be facing some stiff competition because you've heard from Walmart that they're going to be doing same-day delivery or one-day delivery. Right. Without a membership, one-day delivery. Target says that they've been able to do something like fulfill 50% of 2-day orders in 1 day now. So they are working towards that same thing. And Brian Nagel did point out that you are seeing the companies, the retailers that are doing well are the ones who have found ways to find this online delivery systems and find ways that the customers want to get their product faster.